Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. And today we're going to talk about the power of trading an inside bar. Before we begin our video, we always start off with our disclosures. Any symbols that you see today should not be inferred as a trading recommendation. Any form of investing you choose, stock, forex, future options, all have a level of risk associated with them. You can lose all your money. Any strategies we use today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As always, we like to start our videos off with cartoons or quotes, and we thought this one was appropriate. And it says, "A peacefulness follows any decision, even the wrong one." And this is by Rita Mae Brown. And that's one of the hardest things that transitions a losing trader to a consistent trader. And understanding that trading is not about being right and wrong. Trading is about having a system that you can have a positive expectancy about. And that simply means that you've back tested and you traded your system enough that you know that over a period of time, that when I look at the results of my trading, this particular setup, that my wins outweigh my losses. And therefore, it's not about being right or wrong. I can have a peacefulness about my trading because I have a positive expectancy. I know that I'm going to make more money than I'm going to lose, and that it's not about losing. That's just the cost of doing business. So, again, today we're talking about the power of trading an inside bar. So we're going to talk about what it is, why it's important that we know what it is. We'll go over some general trading rules. We'll look at some examples, and then we'll review at the end. So what exactly is an inside bar? Well, an inside bar is a bar which is completely within the range of the preceding bar. It's a higher low or a lower high compared to the bar before it. So putting that another way, we have our larger bar here. That is our preceding day. And today's bar, the bar trading day, is within the range. The high and low of this bar is within the high and low of the preceding bar. It's sort of like a inverted engulfing candle, where this bar is actually engulfing this bar. So it's basically the range is inside of the previous day's range, the open and the close, the high and the low. Now, why is it important? It's important because it indicates indecision. It indicates consolidation. The buyers and sellers are trying to decide who's going to win this battle, and so therefore they're in balance. One is now outweighing the other. And so basically, that when you look at these two bars together, the psychology is showing that the short-term influence on the price of the whatever you're looking at, future, forex, options, stocks, whatever, is possibly either going to reverse or continue. But right now, the inside bar is showing we're in balance. We are equal with the sellers and buyers, and they need to then either re-gear up, reload, and put forth the new pressure on the stock, or we're going to reverse and head in the other direction. So some general trading rules that we can look at for the inside bar is simply looking at the high and low of the range. So in our example here, as we come up and sort of an uptrend here, even though we know there's a higher bar here, we want to mark the high and low of the bar. Mark the high and low of the inside bar, not the preceding bar, but the inside bar. And then you can trade the breakout in either direction. Now, it's best to find these inside bars at support and resistance. For instance, here we have an inside bar at a support level. And so we trade the break. If we trade, as you can see, the buy here, that is because we're saying that the support, we made the inside bar at the support is holding, and we want to trade higher. And there we can see that the market did reverse at support and we went higher. Now here we have an inside bar. Notice that it's not at support or resistance, and as we're coming back down, We trade the break, again marking the high and low. We're breaking low and we trade down. So the key is we really love to see them at support and resistance, just like we like to see dojis at support and resistance. But also we're paying attention to the high and low of the day for that inside bar, and we're trading a break outside of that range. Let's take a look at some examples. Okay, so we're going to look at a couple examples for us here. So let's start off with Baidu. We're looking at a daily chart here. And so here's our first inside bar. Again, it's completely inside the range of the preceding bar. We even have it denoted on our volume here. So we marked the high and the low. We did break the high and we did fine. Here's another inside bar. You mark the high and a low. It gap up. 2 days later, it does break the low, and you would have done fine. Over here, look at this. Look at this doji at support. It breaks the high, and you would have done fine. This doji here still broke the high and fine. And you could even make arguments that here's a doji at support. Here's an inside bar at support. So again, when these things happen at support and resistance, good sign, because that's where that indecision is going to happen. Are we going to continue the trend, or are we going to reverse? Let's look at the diamonds, which is just an ETF of the Dow Jones. And okay, so here's an inside bar. We break it, and it comes down. Even if you would have taken this inside bar and you would have done fine, gap up, you would have done fine, at least for a day. Here's another inside bar at a support level, and you would have been in the trade fine. So let's go on to the next one. How about Fizzler? Here's Fizzler. And so here we go. We got a inside bar, and you would have been fine. Even if you would have stayed in for a long term, you would have done even better. Another inside bar. You wait for it, and probably would have broke here. You would have taken some heat, but we never broke the high of the day, and so now you would have been fine. Another inside bar broke the low of the day, fine. Another inside bar broke the high of the day, and you would have done fine. Let's go on to a gold ETF, GLD. Obviously, when we're looking, here's the inside bar at support, broke the high of the day quite well. Here's the inside bar, not really at support, but if you would have took the high, that's fine. Another inside bar, this one you probably would have lost on. Inside bar broke the high of the day, and you would have done fine. Let's go to a financial, Morgan Stanley, to show you different industries. Zooming in, notice I'm not scrolling around trying to find something perfect. All I'm doing is zooming in and pulling something up. So here's our inside bar. If you would have taken this, you would have been fine. You definitely would have locked in some profits. If you would have held long term, fine. Inside bar, you broke the high. You could have made some profit on this one. Would have been tight. Couple inside bars finally broke to the upside. You would have done fine. Let's keep going. Netflix, which is on fire. Alright, so here we have an inside bar at support. Very nice. Another inside bar, looks like a rising 3 pattern, fine. Another inside bar, fine. Another inside bar, fine. Another inside bar. We probably wouldn't have gotten this one because it gapped down. Inside bar, trade the high, fine. RIM. RIM used to be one of our industry leaders, but it's kind of going down the path. Here's an inside bar. You could have traded that down. Another inside bar, traded that down. All these trading downs would have worked out. Sears Holding, an old staple. Just trying to give you a spectrum of different stocks. Inside bar here, broke the low, would have done fine. Inside bar here, you wouldn't have done this one because, well, you could have. Gapped down and ran, so you could have done right on that one. Not the best on that one there. Let's go to United States Steel with X. Inside bar here, gap down. You wouldn't have traded it because of that gap down. Here's the inside bar, gap down, and a move after the gap down. So the difference here is this one gap down and went up. This one gap down. So you might have taken that one here. Inside bar, traded that one lower. So that one could have worked out. So those are all stocks. Let's take a look at a couple currency pairs just to show you it works there too. Alright, so we got the Euro USD Forex inside bar at support, fine. Inside bar, rising three pattern, fine. This one here probably would have been tight or stopped out. Inside bar support, fine. Inside bar, fine. Inside bar, this one too could have made a little profit or stopped out. Inside bar went lower. Inside bar went higher. Inside bar, higher, higher. So we can see it's working on Forex. We'll go check out gold and some futures just to show you. So here's the gold futures here. And inside bar at support, fine. Inside bar at support, fine. Inside bar at support, fine. This one could have been iffy right here. This inside bar, fine. Inside bar, fine. And why not, since we're talking about futures, go ahead to the ES. Whoops. And here we go, inside bar at support, fine. Inside bar support, you would have made a little profit there. Inside bar, this one was iffy depending which way you go. Inside bar, fine. So you can see that it's working on Forex, futures, stocks. Doesn't make a difference. The best way to trade these inside bars are when the market is trending. So let's end with reviewing the rules and reviewing time frames. We've been looking at it daily. I also like it on a 15-minute. So let's go ahead and start our review. So let's go ahead and start talking about some of the rules again. We're going to review the best places, the best times to trade our inside bars. So we believe that inside bars are best for continuation trades. It doesn't mean they can't identify reversals, especially when we're talking about support and resistance levels. But that's at support in a trend. So we're in an uptrend, the market pulls back to support, makes an inside bar. You can trade that back in the direction of the trade. And you can also trade them at, again, the highs and lows. I prefer inside bars at support or resistance and trading back in the direction of the larger trend. The larger the preceding bar, the better. And we also want to have the second bar to be smaller. What we want to see is a nice, strong momentum that's really showing a great trend. And then we want to see the market come to balance between the buyers and sellers. Thus, we have a smaller inside bar or a doji. Likewise, we want that large bar to have a nice size volume, and we want the inside bar's volume to be less than that of the preceding bar. I prefer for Forex to trade inside bars on the daily charts, and for stocks and futures, I like to trade inside bars on the 15-minute chart. We do have some resources for you. You can find the rest of our videos on technical analysis and trader's mindset, chart patterns, trading plans, everything. You can find us on Facebook, YouTube, and Twitter. On YouTube and Twitter, our username is Wheel of Mike, and we have a page on Facebook called Are You Financially Literate? Some other resources that we can talk about is our free 5-part video course on high probability trading. You just sign up and then we'll email you back with the link to where the videos are. We also have a futures trading room with a great track record that you'll find when you click on the link. Earn while you learn, and there is a free trial. We have a futures broker. If you sign up through us, 20 free trades, and what makes them kind of different is intraday margins as low as $300. And for our Forex traders, cashback for Forex trade, whether you win or lose, it doesn't change your spread, doesn't change anything. It just allows you to be paid to trade. And then also we have some automatic Forex signals for you. Whether you want it to be automated trading or whether or not you want to get the signals and trading yourself, that is fine. In the end, it doesn't make a difference about your trading system, your indicator, or whatever trading room you're in if you don't pull the trigger. And that's what we do here at Move Up with Mike. We help you through coaching, and we do have a video course. But preferably, if you get into our coaching, we can help you build that psychological capital to be a focused, disciplined, and consistent trader. Thanks, guys, and I'll see you next time.